And we're back with our end of day post wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous post-wave price trigger reports. I do apologize that yesterday, or should I say last night, I was running way behind schedule, and so I couldn't do a thorough review. But tonight we're going to do just that. Our very first chart is of the Dow Futures ETF by the way of DIA. And you'll see something interesting here. We had a rally today in the market, right? But notice this. The market stopped short at the top of the Kumo cloud, which is showing to be quite a remarkable resistance point. And another thing that you will note here is that the bears are still in control, and we're still in a bear market. We have not come out of the bear market. All right. So you had a bear market rally that's showing signs of ending. Now, it didn't end in normal fashion where, like, you got the top sign here with the crash alert back here, and you had a nice little correction, but then the market came up and now it corrected again. So I think right now, things are looking quite dicey. I know that the world is thinking that the market wants to go to unbelievable highs, but looking at the algo charts, that's not what I'm seeing. The algo charts are not suggesting that that is what is brewing. I know what people are saying. They're already starting to say, yeah, we're going to have a soft landing if we do have a recession and all this other stuff. But when you look at, excuse me, the actual chart, it says something totally different. And that's my whole point. You got to go by the algo charts, not just your regular market data. You got to go with the algo charts, because it's the algo charts that show you what's really happening in a particular market. So that's why I developed the algo charts for that reason, because it's very easy to fool people, but you can't fool the algo chart. That's something you can't do. All right, let's take a look here at the next one. Oh, thanks, Mick. Happy New Year to you too, and also best wishes for you for this new year as well. All right, IT, this is for you. This is your Litecoin. Let me go ahead and get that going here. Give me a second. I'm talking, and I guess I can't talk and think at the same time. All right, so let's get this Litecoin up for you. Here we go. Okay, Litecoin. All right, let's see what we got. All right, for some reason, it's not coming up, so this is what I'm going to do. Let's see. Just bear with me for a minute. Oh, okay. Never mind. Where is it? It's already open. I just have to find it. Okay, let's see. Here we go. All right. Here's your Litecoin. All right, as you can see here, here is Litecoin by the way of the ETF, and the ETF is LTCN. You'll notice that this market looked like it was going to really explode, and then we got a crash alert on the week of January the 18th. The market came down and then popped back up, but not all the way, like a 50% retracement, and then now we're headed back down. So this market is topsy-turvy right now, going between bullish and bearish. It's consolidated. Doesn't look like very much is going on, but the market is in a bearish pattern. So we're looking at a bear market situation right now for Litecoin. All right, next up is Ethereum by the way of ticker ETHE, the Ethereum ETF. You notice that the market ran out of steam when it popped its head above the Kumo cloud here, and now we have a crash alert for tomorrow's trading in Ethereum. All right, so as you've heard me say, equities are usually better priced as far as their counterpart. You know, these ETFs are derivatives of derivatives. So basically, you know, the Ethereum never stops trading. It doesn't pause. It's 24/7. But your ETFs do pause over the weekend. So they're prone to have gap ups and gap downs, but they're better. They are very well priced. Case in point, back here when we had the last major crash alert, and you got all this downside production. Then when the market based out, you got your bear market rally, and now we're getting another one. But we also have this blue line coming up here, which suggests that we may have limited up or downside, because this is a neutralization bar that's showing that the market is probably just going to move sideways for a while, like it did back here when you got the neutralization bar. It spent a few days just going absolutely nowhere. All right, so we'll see what happens. Next up is the Australian dollar by the way of ticker FXA. And you see we have a rally alert as the Australian dollar broke the 70 cents mark. And the ETF is saying that the market is poised to explode higher. We did have a positive bot check on Friday. And you can see the last time we had a positive bot check, we had a nice explosion. This one here, same thing. Every time we get these bot checks, they are followed by powerful moves in that direction. So looking like the long side of the market is where you should be on the Australian dollar. All right, as far as the pound sterling, this is ticker FXB, and we got a crash alert for tomorrow's trading on that. Looking at the euro currency, we have a continuation rally that we're expecting, and this one as the US dollar continues to weaken. But we do got this gap up from the week of January the 9th, and the market has not come down to close that gap. So at some point, the US dollar is going to bottom out temporarily while the euro currency back and fills from the gap. All right, next up we got the mighty Bitcoin by way of GBTC is the ticker, and we expect rally continuation on the Bitcoin. Looking at the gold miners, we got a crash alert for tomorrow's trading. The last crash alert we got was about 5 bars ago, and so far we have no downside production, but we see that the bears are still under control of this market. And the gold miners have crossed over from a bull market to an official bear market. So take heed to that. I think some downside is coming our way. Now let's take a look at gold. Okay, this is by way of ticker GLD. Back-to-back crash alerts on GLD. Back-to-back crash alerts, ladies and gentlemen. So it may be time to start looking at some selling in your gold temporarily. Looking at the Russell My Hustle by way of ticker IWM, and you'll notice that it's also looking weak. Now, we had a crash alert coming into today, but we got no downside production. Instead, we got a bit of a rally, but we've reached a resistance point. The last time we hit this resistance point, the market crashed hard. So right now, the bears are still in control. You're still in a bear market, and the bear market rally is off the table from now. I know a lot of people are calling for the stock indices to really rally from here, but the algo charts are just not saying that. Taking a look at crude oil, you'll notice the ticker OIH is consolidating up here from the crash alert and showing weakness. So you've crossed from a bull market to a bear market now in crude oil. So I think downside is coming. Taking a look at the NASDAQ 100, it's still in a bear market, as you see, but the bulls are still in control of this one. And the NASDAQ's been the weakest out of all the indices, so it's understandable that it will rally. And we do have a new weekly high and a positive bot check from Friday, so this one has much higher to go, probably around the 295 to 300 mark on the NASDAQ 100 QQQ. Looking at silver now by way of ticker SLV, we have a crash alert for tomorrow's trading at the top of the Kumo cloud. I think the bottom of the Kumo cloud at 1950 is now in play on SLV. Next up, we have the S&P 500. And as you can see, we got sideways action. We had a bear market rally that fizzled out, and the market is nearing a resistance point. So the last time we got up there, the market did correct heavily, and I think we're going to see more of the same. Looking at bonds by way of ticker TLT, we got a crash alert for tomorrow's trading. The bear market rally has fizzled out, and it looks like the market is ready to head back down, which means interest rates are about to explode higher. Looking at nat gas by way of ticker UNG, you see we're hitting new 52-week lows on a daily, but we may have a moment of reprieve as we have a rally alert for tomorrow's trading in nat gas, ticker UNG. Next up is the US dollar. We talked about that earlier. It's the ticker UUP. And you can see the market is trying to base out at this level. We have back-to-back rally alerts, but no upside production as of yet. So UUP could start to look attractive. And if we get anything going, the top of the Kumo cloud at 2850 is the initial upside target. And next, let's take a look at housing. We've been hearing a lot about the housing market and ticker XHB, the home builders. We came into today with a crash alert, didn't get any downside production yet. Instead, the market wanted to try to rally. And I just think that's going up a ladder to have a higher point to fall from. So top of the Kumo cloud is $62, the initial downside target, followed by the $59 mark, which marks the bottom of the Kumo cloud. From that point, you would go into free fall. So definitely something to watch here, as this is a bear market, and it looks like the bear market rally is over, and we've put in a short-term top. Last but not least is this financial sector. As you know, we're entering earnings season and whatnot, and you can see that ticker XLF is looking like it wants to roll over as well. You had a crash alert, you had the initial downside production. Now the market's trying to peep its head back up above the Kumo cloud. I don't think it's going to be able to stay up there long. I think the next leg down could take us to the bottom of the Kumo cloud at $33 a share. And then once it drops below that, it goes into free fall. And then the 52-week low is in play. All right, so that's all we got for tonight. And hopefully we'll be able to get this thing back on and popping. I'm looking forward to, Lord willing, start back up the podcast tomorrow morning. So a lot of great things are in store. And I just wanted to encourage everyone as we're starting off this new year. Things may not have started off the way we would have liked them to, but yet here we are. So remember, the system works if you work the system. So remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take whatever you can from the markets and give nothing back. What that means is take the profit that you can take and don't give it all back by the way of losses. You don't want to get in the habit of doing that. All right, folks. So I will see you guys in the next one. And hopefully soon we'll be able to do a little bit more. I have some plans for this year, things that I would like to do. And if I'm able to, I will most certainly do them. So fingers crossed to see if we can do some of the things that I would like to do. Time has always been an issue for one. So if I can make it pop, I will definitely make it pop for you. All right, let's see here. Give me just a moment. Hold on. All right, I see you with the theta question. Hold on. Let me see if I can get in there. I may not be able to. Just bear with me. All right, let's see here. Yeah, I'm having issues right now. I apologize for that. But we'll see if we can get you for the next one. All right, folks, don't forget to smash that like button. I'm out. Peace.